Hello and welcome to the latest edition of Millennial Money. Now this week we're going to be talking about help to buy equity loans. So last week we were talking about help to buy ISAs and lifetime ISAs. We're slowly going through the different schemes that are out there to help people trying to get onto the property ladder. So this week what we're going to do is Lauren is going to start off talking about some of the details of help to buy equity loans, and then I'm going to take over with a few examples just to illustrate the point.
Okay, so following on from last week's video, we actually had a question from someone who follows us on Instagram asking about any schemes that are out there for second-time buyers. So the Help to Buy equity loan is actually available for first-time buyers, but it's also a really good government-backed scheme for second-time buyers as well, helping them to get further on the property ladder. So this current scheme, the Help to Buy equity loan scheme, is running up until March 2021. After that, the scheme does end, but there will be another scheme which is exactly the same, the Help to Buy equity loan, but it's only for first-time buyers from 2021 until March 2023. So if you are a second-time buyer looking to get up on the property ladder, then you need to take a look and take action on the scheme whilst it's available now. So with the Help to Buy equity loan scheme, you only need a 5% deposit as a minimum, and then you actually get a 20% loan from the government, 40% if you are buying a property in London. Therefore, you have 25% as a deposit, and you only need a 75% mortgage on the rest of the value of the property. One of the perks of the Help to Buy equity loan is that you actually get no interest on the loan for the 5 years that you have the loan out. After that, you do have to pay an interest fee. The max purchase price for the properties on the Help to Buy equity loan is £600,000, and that's across the whole of the country. So if you want to do the Help to Buy equity loan scheme, you can only purchase a new build home, and you can only purchase those new build properties from developers that offer the scheme. One other point with the Help to Buy equity loan is you can only borrow a maximum of £120,000 from the government, or £240,000 if you live in London. So that's the maximum 20% loan from the government that you can get to purchase a property.
Okay, so the other points I just want to focus on are relating to the loan from the government. So the loan from the government that you get, as I said, will be about 20% or up to 40%. Now that loan is repayable after 25 years, and there's a monthly £1 fee that's applied throughout the term until you repay that mortgage. Now after the 5 years are up, what happens, you start being charged an interest rate, because you're not charged an interest rate before. That's why it's so good for people trying to get on the property ladder, and that interest rate is 1.75%. And that interest rate then starts to rise every year in line with what they call the retail prices index plus 1%. So it's basically an official a measure of inflation that the government uses. Another point to note is that it's the only property that you can own, and you can't use the property to be you can't rent it out basically to create a buy-to-let. And alongside the government loan, you've obviously got to get a traditional mortgage, what they call a first charge mortgage. So let's do an example. Let's say you have a house that you're going to want to buy, a new build that's worth £200,000. So that means you need a £10,000 deposit of your own. You're then going to get obviously that 40 grand loan from the government, which will be obviously on 0% interest, and then you're going to get a mortgage to cover the rest at around £150,000. Then what happens is after the 5 years you start being charged interest on the government's loan, but obviously you could remortgage if you wanted to. But if you go to sell the house, what happens is that the government obviously gets to keep a certain percentage of that sale price. That is based upon the original amount loaned to you and the value of the house. So in this example I'm talking about, the government's loan is equivalent to 20% of the original purchase price. So if you decided to sell that £200,000 house for £400,000 a number of years later, then the government will get 20% of that value, which will equate to £80,000. So that is a quick roundup of the Help to Buy equity loan scheme. One thing to note as well is that this is based on the rules in England. So if you're living elsewhere in the UK, the rules will be slightly different, so you're going to have to look those up. If you want to know more about the Help to Buy equity loan scheme, then we've got an article on our website and a guide for first-time buyers. Now, the reason I have to just finish on is the reason why you've always wondered when you go to these new build places, these estates, and you see those massive 4 or 5 bed houses, and you always wondered who buys that as their first time buy a house? And the answer is this scheme has enabled people who aren't first-time buyers, who've earned up to like £100,000 to use it and get basically a kicker from the government to be able to buy those big houses, which is quite frankly unfair, and which is why the scheme's being changed in the future, as Lauren has said. Anyway, that's a rant over.
So that's it for this week. Thanks so much. As ever, follow us on our social media channels, our Facebook Money to the Masses, our Instagram Money to the Masses, and our Twitter @Money to the Masses with the number 2. Subscribe to our YouTube channel, and remember, any questions that you have, get them emailed in to me, Lauren@moneytothemasses.com. Thanks very much. See you next week.